Money Storm Show. This is a place of discussion about all things money and how to weather that financial storm. Without further ado, you have your hosts, Chet and Larry. You have Chitanya Moga, otherwise known as Chet, the founder of Brightcap Financial, a commercial and alternative mortgage brokerage. You also have Larry Heron, the founder of City Center Mortgages, which is a mortgage brokerage specializing in residential mortgages nationally.
Yes, sir. Awesome. Welcome back, everybody. We are here for episode 6. Thank you, Chet, for the introductions.
Absolutely.
It's a rainy day here out in Vancouver / Surrey, BC. But we got some exciting news for this special episode. We have our first guest. That is right. Our first guest for the Money Storm Show, and a very special and intelligent one, I might add. I'm going to let Chitanya introduce our friend. So Chet, take it away.
Yeah, absolutely. So everyone, as you can see, there's a third joining us here today. His name is Gurtej of Whitecoat Financial. He's a great friend of mine. I've known him for years. Over the time, we've gone from friends to business partners. We referral deals back and forth, and just so we can best help our clients and across the board, right? So Gurtej specializes in insurance and investments. That's where his specialty lies, and he can best guide his clients through that service. So we brought him on here today to talk a little bit about that and learn a little bit from him.
I appreciate you guys having me on, man. First guest, this is pressure, man. It's all downhill from here.
No pressure at all. We want the viewers and audience to know that we have a large network, and we are here to help in all aspects of our collective financial industry, right? So life insurance, investments, and what was the third piece I'm missing here? Life insurance, investments,
critical illness, disability, pretty much just financial planning as a whole. Anything to do with money, I'm able to give advice on. So that's really what we're able to help with. And then obviously having referral partners of like commercial financing, mortgages, things of that nature, we're able to refer those out. And so I could give my 2 cents on topics, but then you guys are the specialists that sort of come in. I kind of view myself as like a family doctor, and then you guys as a specialist. So I can give general advice on everything, and then we're going to have an accountant, a lawyer, mortgage broker, you name it, to help advise on all those other topics.
And that's why it's so awesome for us to be interlinked, know what one another can offer, and that's why we're all here. I do have a question for you, Gurtej. Insurance is the big topic, so I just want to talk about like general insurance, life insurance for that matter. It's so closely related to us because we offer insurance as well. It's referred to as mortgage protection plan. Right. So it's a little bit different from life insurance. I mean, I know some advantages, disadvantages. But let's touch on that part. What is the main difference between MPP and your life insurance?
I'd say the biggest differences come down to ownership. With a MPP or mortgage protection plan, it's the insurer who really owns the plan. They dictate the terms on it. Whereas with a private life insurance plan, you get to dictate the terms, and it's sort of set in stone. But more like concretely, the biggest one up front is underwriting. So with mortgage protection plan, they ask some standard questions. I think it's 4 or 5 questions. But they're not very in depth.
To be quite honest, we don't
you guys
get
don't
involved
even
in that part because when we do offer MPP, which we always do offer because everyone should be insured at all times, right? We fax a form over to Manulife MPP, and then boom, the call goes to the client. They take it from there.
Exactly. Right? So that's kind of the big thing is the questions are very broad. There's only like 4 or 5 questions or something like that on there, and they don't go in depth. And you might think up front that's a good thing. These guys aren't digging into my health history.
Right.
But insurance companies are smart. They're going to dig into it at some point. It's just a matter of, are they going to dig into your insurance history up front, or are they going to dig into it when you make a claim? And the key is you want them to vet everything up front so that when you make a claim, there's no questions asked. Right. You're getting approved. It's just simple paperwork to get that claim. Because the worst thing you'd ever want is you pay for this insurance for 20 years and then you actually pass away, and all of a sudden they say, hey, your claim's not approved because of, you didn't disclose this certain thing on your application. You didn't mention that, your mom had this illness or something. Like it might not even have to do with you. So you want to make sure that you're working with a plan where these private insurance carriers, they're doing all the vetting up front. It's a little harder to get approved for, but once you're approved, you're rock solid.
Gotcha.
Right. There's no changes.
Absolutely. And I think it's important to note here that you said the importance of getting approved, right? And like we said, everyone needs to be insured. So, tell us a little bit about what the advantages are to get insured young as opposed to being middle aged, and what the challenges that could pose and how important life insurance is at a younger age itself.
Absolutely.
Just before you answer that, that's a great question.
Yeah.
Because life insurance is not only needed, shouldn't only be needed when you have a mortgage.
Right.
Yeah.
Right?
So to speak on that point first, I got my first life insurance policy when I was 20. I didn't have a mortgage at the time.
Right.
But I had people who I loved and cared about, and I wanted to make sure if something happened to me, how can I financially be there for them if I can't physically be there? That's really what life insurance is. Or for anyone who's like an 80s or 90s baby, we all remember 50 Cent, Get Rich or Die Trying. It's your get rich or die trying fund.
Right.
It's while I'm building my wealth, I want to make sure that if something happens to me and I can't financially be there for them anymore, this is my backup plan. That's really what life insurance is. It's a backup plan of, if I can't physically be there for these people, how do I financially be there for them? And most people aren't going to have that moment until they're married and they have a mortgage.
Right.
But not everyone lives, a more privileged life in that circumstances. I know tons of people, myself included, who had that responsibility earlier on before a mortgage was even introduced. And so that's sort of the first thing. With getting insurance, you should have it when you have people who financially rely on you. That's kind of what life insurance is. If you have someone who relies on you financially, you should have life insurance. It's that simple.
Facts.
Right?
100%.
And then the point of when do I get it, there's a benefit of getting it early because number one, it's cheaper.
Yeah.
You're healthier, the odds of you passing away are lower, and so the cost is going to be cheaper the younger you are. If you get a policy at 20 versus 25, for the same amount of coverage, let's say it's $1 million of life insurance, that policy at age 20 is going to be cheaper than the 25. But I'll be honest, that's not even the biggest concern, because yes, the cost goes up, but it's not a huge amount that the cost goes up. It does go up, but not a huge amount. The main thing is, are you still going to be healthy in 5 years? And that's the key.
20 to 25, a lot can happen.
A lot can happen. And
Great point.
27, we're both young ourselves. You think you're invincible, you think nothing's going to happen. But it doesn't have to be this life-changing illness that prevents you from getting the insurance. I've had clients whose parents weren't healthy, and that caused them to not get the insurance that they needed.
So, Gurtej, sadly, the world is shocking us with shocking health things. Like, young people are coming up with things, and, was it pandemic related? Was it all this stuff related? Who knows? Let's not get into that topic.
You guys are going to get a strike on your YouTube
This is
channel.
not a Joe Rogan podcast.
But
a lot of strange things are happening with health.
So that's the biggest concern is, are you still going to be healthy in the future to get this insurance coverage? And that's the biggest point of locking it in. And it's actually less of a concern on life insurance. It's more of a concern on disability and critical illness.
Right.
I can tell you on a weekly basis, I will have a client who's healthy. Nothing is wrong with their health history, but they've been seeing a chiropractor and a massage therapist and a physiotherapist because their back hurts. Maybe they got into a car accident. And then when they apply for disability insurance, all of a sudden that's considered a pre-existing condition now. And so that's why and that isn't always the case. Like I get around that all the time.
Everything is case by case.
Due to that
Case by
pre-existing
case.
condition, your premium has slightly gone up, or
Either gone up or it's excluded from your coverage. Sometimes as severe as you're getting declined across the board. And this will happen for mental health issues. I've had clients who've been diagnosed with depression or anxiety. I think we could all agree that's more of a mental illness. It's not really going to affect you physically.
Right.
But I'm sure medical professionals out there would be like, hey, if you have anxiety or depression, maybe you're more likely to develop certain heart-related issues or something like that. I have no idea what they are.
You mentioned that.
But people get declined.
I believe mental health and, depression's always been there, but has mental health been a recent add-on to the life insurance industry?
With life insurance, it kind of doesn't matter what you passed away from. You're getting covered as long as you passed away. It can't be for illegal activity.
Right.
If you're driving drunk and you pass away, your life insurance isn't going to pay out. Most people don't know that. If you're speeding and you pass away, if you're doing something illegal and you pass away, the life insurance does not pay out. It only pays out if I'm a gangbanger and I get hit in a drive-by. Life insurance is paying out.
Right.
But mental health wasn't always something that was added on, but it is covered under disability plans.
Okay.
For example, my disability insurance. If I can't do my job because I'm, dealing with depression or anxiety or some other form of mental health issue, and my physician says, hey, Gurtej, you can't do your job as a financial planner because of this mental health issue, that is covered under my disability plans.
Okay.
And so that's why it's so important to have that coverage because, like we said, 20 to 25, maybe you don't have anything physically happen to you. You deal with a bad breakup, grandma passes away, life's just stressful, you're dealing with this FOMO, some of your friends are, going on and living their lives and you're maybe still in school. Like
Financial
that,
burden.
that
Maybe job
leads
loss.
to depression,
Yeah.
anxiety, and now you're diagnosed with it. And what if it's, now all of a sudden it's a pre-existing condition? So that's the benefit of getting coverage early, is you're healthy. And you have more of a blank slate, so to speak. And I don't want this to be construed or confused with, you can still get coverage if you have health issues. That's where working with a professional like myself,
Right.
who has certain designations, who understands the underwriting process, I get clients approved all the time
Absolutely.
who have
Right.
existing conditions.
I have a heart condition and I got a policy with a heart condition.
Yeah, and we both know your advisor. He's amazing at what he does. And so having a good advisor, that's really where we provide our value. But it's just easier to get approved when you don't have health conditions. So that's the biggest benefit. Long-winded answer, but that's the biggest benefit of getting it early.
Yeah, so that's the advantage, guys, for anyone that is young, right? Regardless of if you have a mortgage, you do not have a mortgage, whatever your family situation may be, it's to protect your loved ones, and getting it early is beneficial to help those premiums be reduced and make sure they're affordable, right?
Yeah, it's affordable and your health history is locked in.
Yeah.
Meaning even after you're approved, if something happens to your health, you're all good. Like I explain to clients all the time,
Absolutely.
when we're going through the health questionnaires, they'll ask you certain questions like, do you go rock climbing? Do you do bungee jumping? And all these things. And clients are like, man, I'm boring. I don't do any of this. I said, well, now you can because you're covered. I can go. This is a thing that doesn't get talked about. And this kind of relates to the business you guys do.
Yeah.
You understand my situation because we're working on a mortgage together right now. But I can take a lot more risk knowing if something happens to me, if I pass away, everyone's good in the family.
Yeah.
If I get sick, everyone's good in the family. If I can't do my job, my mortgage payments are still getting made. So what's the downside of me going and over leveraging? It's not really over leveraging, but I don't feel scared about going and getting multiple mortgages and having these high costs and investing because I'm so protected.
Yeah.
And that's where it's life insurances and everything. Critical illness, disability. They're, in my opinion, more important than life insurance.
Yeah, and it's important to say that just because you have life insurance it doesn't mean that you're going to be covered across multiple assets and multiple loan amounts. It's important to note that as these life insurance and these policies exist, that it's important to keep updating those policies as well to make sure you're covered across the board, right?
Yeah.
Because you're making another purchase, now you have more debt. You want to make sure that if you pass away, something unfortunate happens, you're protected, your loved ones are taken care of.
Yeah.
Right? So it's important to keep updating those policies as well.
Yeah.
Just to say the least, right?
I'm glad you said it. It's not a set and forget it. You get married, you have children, you switch jobs, you get a new mortgage. All of these life events should be points in time where you reconsider if you need coverage or not.
Right.
Or do I need more coverage? Do I need less? You have to reconsider all these times and that's where having a good advisor is doing an annual review with you where they're constantly looking at your entire financial situation and then be like, hey, I know you just had a daughter. Maybe we need to get more coverage, or maybe we need to get insurance for your daughter. Like there's all kinds of things that we actually need to implement on an annual basis.
More assets were purchased, more good debt was added on.
Yeah.
Right.
Yeah, makes
Absolutely.
That makes a lot of sense.
We rebalance our stock portfolios.
It's the same way, right?
You got to look at your
Yeah.
insurance
So
portfolio as
we got
well.
to look at our insurance portfolios. Great point.
It's another asset at the end of the day, right? You got to consider it that way because that's what it's doing for us if something ever unfortunate happens.
100%.
Yeah, so I think we swayed from the main topic a little bit. We're talking
Absolutely.
about life insurance and we're talking about mortgage insurance or MPP, mortgage protection plan.
Yeah.
Gurtej, tell us a little bit about what the differences are between, say, a set mortgage insurance and, say, a life insurance or critical illness and
plan.
disability in those plans, right?
Yeah.
And how one is better than the other.
Absolutely.
Or, can be used in transition.
Yeah, so I think the first point was the underwriting, and then we went on a whole tangent.
Yeah.
The first point is that MPP does underwriting at claim a lot of times, whereas a private life insurance policy does underwriting up front. They don't really relook at your health history once you're making a claim.
Wow.
That's
Actually,
I didn't know that.
I did not know that.
I didn't know that either.
That's the main
offering
point.
MPP. Love you guys, right? We've been
Yeah.
offering MPP for so long, and I never
Yeah.
knew that the questions happen at the time of claim.
Yeah, or they'll look at your medical records at that time. It's not across the board, but it's very common. There's been documentaries, I think, done by CBC, where you used to get this insurance through your advisor at a bank after you got a mortgage, and you fill out the health questions, and they're not licensed professionals to do this, but the banks get away with quite a bit.
They're bank products, right? It's
They're
the same
bank
way
products.
that a mobile mortgage specialist will work for example, TD Bank, and we can work with TD Bank in the same way,
In the same way.
right? We're able to offer
But you're a
those
licensed
products.
professional.
Exactly.
Exactly. So you're not a licensed professional. A lot of the times they're telling you to fill out the health questions, and You're just happy your mortgage got approved. You don't really care. You don't remember that 5 years ago you had this minor incident with a heart and you had an ECG completed. The results came back fine, or maybe there was a follow-up pending. Meaning there was no diagnosis. There was just a follow-up pending. You're supposed to go see a cardiologist. You never did because you felt fine. MPP, you're getting a decline when you make a claim because there was something pending. You didn't mention it. Whereas a private policy, that's going to come up. I'm going to ask you about it. It's going to come up in your doctor report because we're going to do an attending physician statement. So MPP, you're approved almost instantly, and that might feel like a great thing, but you actually want a proper, fully underwritten plan so that when you make a claim, it's rock solid.
Essentially, in mortgage terminology, MPP, you're paying a premium for a conditional pre-approval.
Exactly.
It's not even a hard approval.
Yeah.
You just hit the nail on the head. I've never even thought about that. MPP is like a conditional approval, whereas a private life insurance policy is a beyond the commitment letter, lawyer signing, everything's done, firm deal, broker complete.
Wow.
Right.
That's the difference.
I didn't even know the difference. That's
And
incredible.
so that's
I
just
never knew that
one,
either.
though. It gets worse. The other thing is with an MPP, you're insured for the
Gets
mortgage. it gets way worse. That's just the tip of the iceberg. You're only covered for the mortgage amount. Meaning, I have a $500,000 mortgage. I have 2 children. I don't actually, but I have 2 children, and I want to make sure I leave another $500,000 to them. I'm only covered for $500,000 with MPP. So you only are covered for the actual mortgage. You're not covered for what your actual insurance need might be.
Yeah.
Your mortgage is just one portion of the debt you might want to cover. Maybe you want to
Yeah.
pay for children's education. Maybe you want to leave enough money behind for mom
Right.
so that she can live her life, whatever the case is. So that's number one. You only get coverage for the mortgage amount. Private policies, you get coverage for whatever amount that you apply for. That's sort of difference number 2.
Right.
Difference number 3, with an MPP plan, your beneficiary is the mortgage. You do not get to choose who the beneficiary is. You do not get to choose where that money goes. It pays the mortgage off. With a private policy, you get to choose your beneficiary. And the reason that's such a big deal, what if I have credit card debt, car loan debt? What if I have all these other debts that I owe? I'd rather pay life insurance toward those 19, 20% interest loans
Right.
versus my mortgage that might be locked in at 1.99.
Makes
The
perfect sense.
beneficiary's surviving spouse or surviving family member gets to elect to pay down more higher debt opposed
Yeah.
to good debt. Makes
Yeah.
complete sense. Yeah.
Exactly. So that's the other thing. And then I guess the final piece is I don't want to misdiagnose MPP. I believe
It's
MPP.
okay. I'm going to recap MPP and life insurance as well.
Yeah.
On topic, but go ahead.
I believe MPP now is transferable between products.
Okay.
Meaning I got my first mortgage at TD, my second mortgage at Scotia, and they will transfer it.
There you go.
But you guys are brokers. You deal with MPP.
Yep.
If I'm a mortgage specialist or a financial advisor at a bank, my mortgage insurance is only with that company. I refinance, let's say with it, we're picking on TD. I used to work at TD, but I love TD. Let's say I get my first mortgage at TD. And then I get a second mortgage at TD because I refinanced and pulled some equity out, but I had to pay off the first one and got a new one. I have to reapply for the insurance now.
Interesting. Okay.
Maybe I'm not as healthy as I was.
Yeah.
Now I get declined and I need that coverage. Or maybe I opt out of it the second year and then all of a sudden I get sick again. So you have to keep applying for coverage when you get mortgage life insurance.
Yeah.
Private policy set in stone, you don't have to touch it again.
Yeah.
I got a policy for 40 years, it's locked, set in stone for 40 years.
Right.
Doesn't matter how many mortgages I have throughout that term.
Yeah.
So it's like, those are like the 4 big points. I'll summarize it here. With mortgage life insurance at a bank or MPP, you're doing less strict underwriting. Meaning, when you make a claim, you might not get paid. Private policy, underwriting's done up front, no questions asked when you make a claim. Number 2, with a mortgage life insurance plan, you do not control the beneficiary. Private life insurance plan, you get to control who that money goes to and even the percentages of who it goes to and when it goes to them. Third is with an MPP or mortgage life insurance plan, your coverage amount is set to the mortgage amount. It's tied to the mortgage amount. You cannot get more, you cannot get less. Private life insurance plan, you determine exactly how much coverage that you get. And then finally was the transferability. With the mortgage protection plan or mortgage life insurance at a bank, you have to get new coverage every time you get a new mortgage. Private life insurance plan set in stone. It doesn't matter what happens in your life. It does not change. So it's like 4 key differences of why you should have both.
Right.
Or sorry, why you should have private,
Yeah.
not
versus
Yeah, well, that makes sense.
insurance.
Gurtej, I
Totally.
must say this, that was incredible,
That
right?
was.
Like, I didn't even know some of those things.
Yeah.
And then it's important to say that, you know, we legally have to offer you mortgage protection insurance.
Yeah.
But we always leave it to the professionals, and we always advise you to connect with professionals like Gurtej so you can best discuss your needs, because it's so important, and people don't realize the importance of life insurance or mortgage protection insurance or whatever it may be. But this is why the advisory role exists altogether, right?
Yeah.
Like, we don't even know some of these things, and we're learning, right?
Yeah.
So this is why we advise you to connect with individuals like this, so you can best learn these things and apply those to your life.
Yeah,
It's
because
just how you would talk to us as specialized brokers.
you don't know what you don't know. I'm sure you guys deal with it on a weekly basis where someone calls you and says, hey, I got declined at the bank. They said I need 20% down. And you guys are like, no, you don't. Because you don't know what you don't know. That's why you speak with a professional.
Absolutely.
I don't make assumptions about what's going on with my health. I go to talk to a doctor. My back's hurting. I'm not going, man.
I think we all do a little bit going to
A little
Google.
bit. But yeah, you do the Google search and you self-diagnose yourself, but you always go see a specialist to make sure what your options are. And the craziest thing is, no one pays for your services.
Yeah.
Why wouldn't you just give Larry a call? And, be like,
And same thing with
"Okay,
yourself.
same thing with
right?
myself.
Yeah.
On the insurance side, we don't charge a fee. We get paid from the insurance company. I tell clients, just give me a call for a second opinion. Half the time, I'm going to tell you your product's great. We don't know how to do anything. You're good.
Right.
As professionals who offer, niche services, it's a win-win situation for our clients, right? Whether you're using a life insurance agent, a mortgage broker, commercial broker, residential broker, you have to use the professional in that specific space, because that's why we are here, right? And we will cover all the angles and all that sort of stuff.
Yeah.
So, awesome stuff.
Yeah.
Yeah, the tricks that you just taught us, the tips and the tricks,
Yeah.
especially with the pre-approvals the conditional
Yeah.
MPP offering. Did not know that.
I think, like, to sort of wrap it up, though, on that side is, I'm not saying MPP or those products are bad. Chet's done files where he said, hey, client, get this for now, and then go see a professional to get this replaced later.
Absolutely. Yeah.
So if you are getting a mortgage, get the coverage up front and then go get an actual private policy and then cancel the old one.
We like to consider a transitionary policy.
Yeah, because it might take you 2 months to get approved on your private policy. You want to make sure you have this as a hold me down.
Anything can happen in 2 months, right? You could, for example, say you go buy a car. You could literally crash that car into a ditch right in front of it, in front of the dealership. It happens all the time. It's the same policy, it's the same idea, right?
Yeah.
Like, anything happen in that time frame. You don't know what's happening, what life can bring on.
Yeah,
Right?
so it's a
So
good hold me
can
down
change.
until I get my actual solid life insurance plan.
Kia, stay insured. Like I tell all my clients as well, my clients know, our audience that may be listening is, stay insured. We are gonna offer you insurance. Mortgage protection is huge, right? Because if something were to happen to your life, heaven forbid, we want that balance to be paid off.
Yeah.
But private life insurance is probably going to be better. I just want to give one example, and I wanted you to confirm. This is something that I tell all my viewers, and I've kind of held on to. I offer mortgage protection plan. Always do, always will. I'm a big believer in insurance. So my client has a $500,000 mortgage, and let's say the premium is $100 for life insurance or whatever it may be. Just example, right? Now, I tell my clients that yes, you want to be covered because we don't want that balance to be passed on to a family member, but private life insurance, if you're paying $100 a month, your policy might be $1 million.
Right.
Key difference, you're paying $100 a month for a decreasing death benefit.
Yeah,
absolutely.
Decreasing. That 500K balance goes
It's
down to
dropping every day.
$400,000, but I'm still paying $100 a month. And I've told my clients this, stay protected. But once you get converted over to private life insurance, that same $100 is going to be $1 million policy, just examples, but that doesn't change. Once your mortgage is paid down to zero, you've still got that $1 million for your family members.
Yeah.
So private life insurance is the way to go, but stay protected. That's why we offer mortgage protection. And that's why we deal with guys like Gurtej.
Yeah.
And I'm going to say it, Sim Sahi with,
Sahi
Sahi Wealth.
It's a legend.
He is a legend.
So,
But, talk to professionals, guys.
Yeah.
Gurtej, thanks for those tips.
Yeah.
That was awesome.
That's incredible. I just want to say that, again, just to really simplify and clarify the process, private life insurance is catered specifically to your needs, to your existing health conditions, and your life, period. Mortgage protection plan is not. It's only catered to your mortgage.
Yeah.
That's the main difference.
Yeah.
Right? You want to make sure you're protected across the board. So talk to advisors, talk to people, talk to the professionals that do this every day and that can advise you in the right direction.
Absolutely, man.
Yeah. Gurtej, tell us a little bit about corporate insurance. I love this
Yeah.
topic because I'm on the commercial side of things,
Yeah.
right? You've been telling me about a lot of tips and tricks on the corporate side.
Yeah.
So let's just, I mean, it's very difficult to get into the in-depth
Yeah.
part of it, but
Yeah.
let's chat just a little bit about it and tell us literally what it is.
Yeah, I'll split up. Commercial insurance is not a separate product when it comes to the life, critical illness, and disability. There's just different versions of structuring it depending on if you have a corporation, whether that's a professional corporation because you're a doctor, or whether that's, you know, an actual business that has a corporation set up for it for, I don't know, bakery or mechanic shop or whatever the case is. So the product's the same, it's just structured very differently depending on your tax situation of being a sole proprietor, an individual, or a corporation. I guess I could split it up into three parts. With disability insurance, that's kind of key. On the personal side, you have disability insurance to make sure that, God forbid, I cannot do my job, that I'm covered for any physical injuries, illnesses, and even mental health issues. So as long as a physician says, hey, Gurtej, you cannot do your job because of X, Y, and Z, I'm going to get a paycheck every single month as part of my disability plan. That's on the personal side.
Right.
If we switch that to a corporate disability insurance plan, there's sort of two ways to go about it. Number one is business overhead expenses. So if I'm a dentist and I have a clinic with 4 dentists under me, so 5 of us in total, I might get a business overhead expense plan to make sure that if I, as the primary dentist, can't work, that all the overhead of that clinic is covered so that my existing associates can still keep working and earning me a revenue because I'm earning, you know, my 20 or 30% off of their production as well,
Right.
but I can keep the doors of my clinic open. Just because I can't go in there personally anymore, I still want to make sure my business survives. So that's where a business overhead disability insurance plan would come in place.
Right.
Very key there.
Keeping the lights on.
Keeping the lights on if I can't physically be there.
Gotcha.
I want to make sure if I can't physically do that job, that my clinic or my business is still protected. And this would work in other industries as well. If I'm a mechanic, I want to make sure my shop stays open if I can't physically work at as a mechanic anymore.
Yeah.
If I'm a chef, I want to make sure my bakery stays open, or I guess chefs and bakeries.
I love that.
Yeah.
You're protecting yourself and then also employees.
You're protecting your employees.
Yeah.
They can keep going to work.
Yeah.
They know the business isn't going to shut down. And more importantly, you worked your whole life. We're all business owners. We understand. I spend time away from my wife, my not children.
My children.
I have 2 dogs. They're my kids in my eyes. But I spend time away from my wife, my dogs, my mom, all these people working on my business. I want to make sure my business can survive even if I'm going through a period where I can't work. And that's what business overhead insurance is. So that's the personal side versus the corporate side. When it comes to critical illness, there's also 2 sides to it. On the personal side, critical illness insurance is designed to make sure that you get a lump sum benefit if you're diagnosed with one of 25 conditions, meaning heart attack, stroke, cancer, things of that nature. If you're diagnosed with one of those illnesses, you're going to get a big one-time lump sum payment. It could be 100 grand, it could be 200 grand, it could be 500 grand, depends on what you apply for. And personally, I'm going to have that coverage to make sure if something happens to me, I have a designated emergency fund for that serious time in my life.
Right.
I know I don't have to sell my house. I don't have to sell assets. I don't have to take on debt. I don't have to call you guys to get private mortgage on my house to pay for treatment.
Absolutely.
I don't have to start a GoFundMe page. I have this as a designated emergency fund to make sure I'm covered. That's the personal side of it. Corporately, you can get it on yourself and you can get it on employees. Let's go back to the example of a bakery because it's very easy to understand. I run a bakery. I have a lead baker and she's very good at making cakes and pastries. If I was to lose her because of an illness, that would cost my bakery, let's call it $500,000 in revenue that year, because she's world-renowned and she's on Food Network and everything. I can get an insurance policy on her to make sure if she's diagnosed with an illness, that I'm going to receive that $500K to supplement the income I've lost, or maybe even go hire a replacement for her. And so, same product, 2 different uses depending on personal versus corporate.
Right.
So you get that one-time $500K payment.
Yeah.
That takes away that person's
burden.
salary or that revenue that was coming
Yeah.
in, and
Right.
you have a year to replace that.
I have a year to replace it. It covers overhead, it covers whatever. And then without getting too complicated, there's another type of critical illness insurance you can get if you have a corporation. It's just critical illness insurance. It's all about how it's structured though. It's called a split dollar or corporate like critical illness insurance plan. And how it works is a lot of critical illness insurance plans offer a product where you get some of your money back if no claim is made. past a certain period of time.
Right.
I might make it a 15-year period, a 20-year period, maybe at the end of the policy. If I live a happy and healthy life and nothing happens to me, I get all my money back that I paid for the
I believe
policy.
that's called the face value of the policy itself, right?
Yeah, so there's either the face value, the 500K that's going to pay out to me, or there's the return of premium on that policy.
Got it.
I'll give you an example. I have a $500,000 policy. It lasts until age 75. And at the end of the policy, I get all my money back.
All of it.
Yeah.
Every dollar put in.
Every dollar put in.
Okay.
So worst case scenario, you get sick, you get paid 500 grand. Best case scenario, you get all your money back at the end of the policy.
At the end of the policy.
Yeah, you really can't lose.
So just another savings account.
It is.
Not earning any interest or anything.
It's not.
Just straight dollar
It's
for dollar.
just straight cash.
Okay.
And that's if you get the policy back, the return of premium at the end of the policy. You can get return of premium after a 15 or 20-year period. So you can have it early. Now, you can own that on the personal side, but if you own it on the corporate side, how you can structure this, and mind you, this may change in the future with CRA. They're not a huge fan of this arrangement because it's pretty powerful. I have a $500,000 critical illness plan in my corporation, and it's owned by my corporation. And then the return of premium portion, maybe that makes up about 15% of the annual cost.
Right.
I'm going to pay that 15% personally, whereas the other 85% is paid corporately, just as an example. Worst case scenario, I get sick, $500,000 gets paid to my corporation. Best case scenario, I live a happy and healthy life. Maybe 20 years pass, I decide I'm in a financial position where I no longer need this insurance. I can cancel it and receive all the money I paid for it corporately, personally, completely tax-free.
Interesting. Okay.
So maybe I put 20 grand or 40 grand into this policy up until this point, and now I'm going to receive that 20 or 40 grand personally, completely tax-free.
So on the putting in end, you're receiving the write-offs. And
Yeah.
on the taking outside, you're
Receiving
You're
the
paying
personal
for it
side.
through the corporate. So
Yeah.
you're paying for it through the corporation.
Yeah.
So there's a lot of benefits.
Right.
tons, yeah.
Exactly. So really all you're doing is it's just a matter of how you structure these things.
Right.
And so that's the critical illness. Like I said, same product, just structured differently.
Quick question for you that stood out to me. The critical illness CI policy, $500,000.
Yeah.
I've decided halfway through that I've got tons of savings. I won the lottery.
Yeah.
And I don't want to put the premium in now. Can I take $250,000 back and still write out a $250 CI policy to the end?
No, very
Okay.
infrequently. You can't break them up like that.
Gotcha.
I
thought so. I had to
No,
check.
you can't break up a policy. You can do that sometimes on the life insurance side.
Okay.
Or you can apply for a reduction, and it's very likely most insurance companies will approve it.
Okay.
That's something you'd have to check depending on the insurance carrier, though, where you could say, hey, I no longer need this policy. Instead of canceling it or forfeiting it, I want to reduce it. And you'll be able to do that with some paperwork, but it depends on each carrier and what their policies are at the time.
Gotcha. Just to make it clear, I mean,
Yeah.
something I wouldn't recommend doing or doing. It was just
Yeah.
a general question
Yeah.
because I'm going to say ride out your CI policy till it expires. You just don't know life.
Yeah, absolutely.
On that note, just another question, right? Say a corporation gets a policy, right?
Yeah.
Just for simple matters. Now, there's of course a premium assigned to it, all that stuff, right? Say, what if I want to contribute? Say my total premiums across the board range to, I don't know, $50,000.
Yeah.
Can I inject $50,000 into my policy directly in the first time around and knock out all my premiums, as opposed to doing those
$5,000 a year for whatever?
Exactly. Yeah.
You can.
Yeah.
But the tightest timeline I've ever seen on a policy, I believe, is 3 years.
Okay.
Where I don't believe you can do it within 1 year or 2 years, because then you start running into certain tax rules. I'm not going to go into those because everyone's going to fall asleep. But you can upload, like sort of upfront pay all the premiums,
right,
so that you no longer have to in the future. Okay. And that's only on life insurance, though, which is, I guess, perfect because now we're transitioning to life insurance.
Yeah.
Personally, on life insurance, I almost always recommend term life insurance.
Right.
I personally don't think anyone should really own a permanent life insurance policy personally. If you're going to own it, it should be corporately owned.
Yeah.
Now, there are nuances to that. There's certain people who should maybe have a permanent life insurance policy. I'm amongst the belief that 95% of the population should have a term life insurance policy if it's owned personally.
Right.
From what I understand, my general knowledge, permanent whole life insurance policies are for the super wealthy that is to pay off the tax from the inheritance.
I think that's exactly why I asked, right?
Yeah, so let's go into that because I get a lot of flack from other people in the industry because I'm not a fan of whole life insurance for 90% of the population.
I like the sound of it. I debated it, but the premium was too much for me.
Yeah, it sounds great on paper. I get one TikTok sent to me every single week with some, I'm not going to say the word, some advisor out there who probably doesn't know what they're doing, where they say, I'll play this out for you guys. People watch this on YouTube.
Yeah.
Would you like your life insurance to expire, or would you like it to pay out when you pass away, no matter when you pass away? Second answer, right?
Yeah,
Yeah.
of course.
Would you want your life insurance to build an investment that grows tax sheltered, or would you want there to be no cash in the policy?
Of course, the first option.
First option.
Yeah.
Third is, do you want to be able to borrow that cash value back from your life insurance if you need it? Versus, do you want there to be no cash value, you never pay for it, and when you pass away, all the money goes to waste?
Of course, first option.
First option. You guys just bought whole life insurance from me.
Exactly.
Do you need it? Probably not. Because it sounds great on paper until we start running the numbers. Until a CFP like myself or a CLU runs the numbers and says, hey, I don't think this is a good policy for you. Because permanent life insurance is for a unique set of people. It is for people with a corporation, usually, with high net worth, high cash flow, meaning they make more money than they need to spend, and then they usually have some sort of complicated family structure. There's a lot of reasons for it, but for the regular average Canadian citizen, 2 partners, 2 kids, they have a mortgage, term life insurance every day of the week for those people. It's cheaper. Like I said, it's your get rich or die trying fund. At a certain point, I would hope that you outgrow your life insurance.
Yeah.
When you're in your 60s, if you still need life insurance, kind of concerning in my opinion, because that means
wrong.
you did something wrong, because
Yeah.
now people would still be affected. But if you passed away financially, when our grandparents passed away, were we affected financially? No. That should be the circumstance. You shouldn't have people who still rely on you. Mind you, if you're ultra wealthy, that might still be the case, but it's not because you did something wrong. It's because there's tax complications. There's an empire to protect. There's a different story.
And it might not be that they depend on you, but it's just that you've attained so much wealth that it has to get passed on.
Absolutely. Because what happens is, at the end of your life, you could pay either the government in taxes or you pay life insurance to cover the taxes. Pick one.
Pay life
Most
insurance
people
all day.
pay life insurance all day because it's cheaper.
Yeah.
Now, coming into that whole corporate life insurance space, permanent life insurance is a great product. It's just diagnosed poorly. We wouldn't start doing radiation and chemo for people who have headaches. Just like radiation and chemo are very unique for a certain type of illness, permanent life insurance is very unique for a certain type of thing.
That's a great way to put it. Yeah.
Most of us, you have a headache, get some term life insurance. You know what I mean?
Yeah.
It's like, it's a common situation. Get some term life insurance. It's cost effective. It gets the job done. It covers who you need to cover. When I recommend people to get permanent life insurance with my clients, there's a few factors that need to be met. Number one, you need life insurance, meaning there's people who rely on you financially. That's obviously, that has to be the case. Or there has to be a situation where if you pass away, there's going to be a lot of money or business or some sort of assets that are transferred to your loved ones, and you want to make sure you're covering the tax on that.
Right.
Let's say I own 10 properties, and these are properties that maybe have development potential. I'm going to want to get the life insurance to make sure the taxes are covered on that, so my kids don't have to sell those policies and lose out on that development potential. Absolutely. That's just one tiny example. Maybe I have a family business, 3 generations in. I want to make sure the taxes are covered on that business, so my children do not have to sell the business to keep it in the family.
Right.
Or maybe they don't have to sell it, but they'd have to liquidate their entire personal net worth just to keep the business alive. That's just poor financial planning. So that's when you start looking at these permanent life insurance products. Or there's the third sort of type of person where you are doing very well in your business. I'll give another example of a dentist, because common situation I'm dealing with is you're a dentist, your RRSP is full, your TFSA is full, your house is maybe paid off, or maybe there's low interest rates on those mortgages and there's no point in paying those down, right? Personally, you're very sound financially. So any new money you're going to be investing is to a non-registered account, meaning you're paying a lot of taxes on any gains you have there. And you're earning so much money that you're in the top marginal tax bracket across Canada, paying 50 cents for every dollar you earn at this point. So personally, you're taken care of. Corporately, let's say you own a clinic. Your clinic has great staff. You pay them well, you have all the newest equipment. There's no further money you really need to invest back into your clinic. You don't need more marketing, and maybe you don't want to open up another clinic with the extra money. So you're literally printing money every single year, and you're like, Gurtej, I have 300 grand that I don't need. I don't need it personally, I don't need it corporately. I have these investments inside my corporation, what do I do? that's when we start looking at permanent life insurance as well, because of its tax sheltered status. Without, again, getting too complicated on the tax side of things, I have this money. If I start investing it through my corporation into stocks or ETFs or something like that, I'm going to hit a certain point where I'm earning too much passive income inside my corporation. I don't want that problem, so I'm going to start buying permanent whole life insurance, because any growth in that policy I'm not paying tax on it. Not in the same way you are with your stock portfolio.
Right.
And maybe I don't want to pay that money to myself personally because I'm in such a high tax bracket. So permanent life insurance makes a lot of sense when you have a corporation. But again, it's not just by the policy. It has to be structured correctly.
Absolutely.
I can't tell you how many files that I've looked at where the client's paying $50,000 for their insurance.
Yeah.
And I told the client, hey, you're paying $50,000 for the insurance. 40 of that is maybe the cost of the actual insurance. 10 grand of that's going to the cash account or the investment portion. We've restructured it where 10 grand is going towards the insurance, and now 40,000 is actually going to the investment account.
Right.
And it
that
does
was in the whole life policy.
I've done it all the time, and it does two benefits for the
How
client.
does a consumer like me get to choose, okay, my premiums, I'm an investor, I always want my money to grow. So if I tell you, Gurtej, my 50K premium, I want
A lot of it.
A lot of it in an investment, whatever, a nice
conservative
portfolio. Whatever.
Comes down to your advisor.
Gotcha.
And this is where, again, you need to work with an advisor who works as a fiduciary, who has their CFP, has their CLU, is educated in this space, and really knows what they're doing. Because if it's structured correctly, it could become very powerful. For example, if you're paying most of that money towards the investment portion, and this isn't always the best case for clients, it comes down to your unique situation. But let's say you're in a situation where you want more of the cash value to grow rather than the death benefit to grow. If you structure it this way, it actually does both things. The cash value grows higher than that existing policy I talked about where the cost of insurance was very high. Setting it up the way I set it up, your cash value is higher, your death benefit's also higher. And then to add a third added benefit is if it's structured correctly, you could actually finance the premiums on that policy as well. Instead of me paying 50 grand a year out of my corporation, instead I could pay 50 grand and get a check written right back to me as a loan. 50 grand on that policy or 100 grand. It just has to be structured correctly, which is why it's so important to work with a professional who knows what they're doing, has experience in this space, but more importantly, is a good person. I can't tell you how many policies I come across where it's like, oh, the guy's a Uber driver Monday to Wednesday, and then on the other days he does insurance, and all of a sudden you've trusted him because, he's a family member, but the policy's not structured in your best interest. It's structured the way that increases the commissions. And I come across these on a weekly basis. And a simple second opinion can save you hundreds of thousands of dollars over a 30-minute phone call.
And this is why insurance is such an investment, right? At the end of the day, it's just not just a tax benefits. It's not all these different things that we're discussing.
No.
It's an investment portfolio as well, right? People fail to recognize that.
I want to touch on something really awesome that you just mentioned right now. Working with a professional. But our good friend Gurtej just said, you've got a life insurance guy, you trusted him because he's your family member, but he's also a part-time Uber driver.
Or whatever.
Is he going to give you the good product? No, probably not. Work with a full-time professional. There are life insurance agents out there. There's brokers out there. There's realtors out there. Some of them are part-time. Some of them are full-time. Work with the full-time professional. Done. Flat out.
And we're not saying it has to be us. We're just saying
anyone,
to any professional so you can get sound advice.
Yeah.
That's all that we're saying.
Filter professionals. I tell people, filter professionals. Ask them how long they've been a professional, how long they've been doing it, why they're doing it. Are you full-time? If you're going to use a broker, realtor, or a life insurance agent, do your homework.
Absolutely.
Yeah, make sure they're full-time. You wouldn't go to a surgeon who does surgeries on Monday, Wednesdays, and Fridays.
That's exactly it.
You wouldn't go to that guy. And
my family doctor is only open Monday, Wednesday, Friday.
Or whatever maybe make a note there. No, but you want to work with someone who takes pride in what they do and they do it full-time and they feed their family doing that work.
They're serious.
They're serious about it.
And they strongly, passionately believe in that, right? That's the only reason they're doing it.
Yeah, you don't want to work with someone who's half there, half doing something else. And I'll be honest, when you're first starting out, I get it. It can be scary as a broker, as a life insurance agent, whatever the case is. It's commission based. You don't have a client base yet. Maybe you still have your 9 to 5 and you do this on the side. I don't want to say that because I jumped into it 2 feet.
Honestly,
but there are people who do that. And I don't want to criticize them. They're just getting started. Right?
Sorry to cut you off, Gurtej, but to add on to that point, on the other side of the spectrum, part-time brokers, part-time realtors, no discredit to you guys. work your way from being part-time to
full-time.
full-time. We get it, right?
Yeah.
You got to replace your income. But on the other end, from the consumer point, sorry, you guys shouldn't get business.
No,
right? You guys got to earn it.
Yeah.
Right? You got to get to that full-time
Absolutely.
position.
And really, you have to vet your professionals. I don't think a lot of advisors like me because I'll tell people to go vet your professional.
Yeah.
Because at the end of the day, remember how I gave the example of a surgeon?
Yeah.
What we do is not as important as a surgeon. Surgeons save lives. Call me stupid. I honestly think I do the same work. In my opinion, I save lives, I save marriages, because if I'm taking care of your financial well-being and making sure you could spend that extra time with your kid, you don't have to take that added risk in your portfolio that stresses you out, keeps you up at night, and now you're arguing with your wife about money. Like, I want to be there to make sure you don't have to worry about money so that you can go and do what you're good at. With a lot of the clients I'm working with, they're dentists, they're doctors. Go be the best dentist and doctor or whatever profession you're in, and let me make sure that you will be wealthy as a result of working with me. I can promise and guarantee you that. How much stress does that take off of
I
you?
love that.
How much?
Go do what
so
you
much
do
more.
best.
Go do what you do best. And so most of like marriages, the number 2 reason behind divorce is money other than infidelity.
I was going to say number one. Okay.
I think infidelity is number 1, and then number
Okay.
2 is finance.
Yeah.
You're telling me because of that, if you're having a divorce with your partner because of money, that's not just affecting you guys and your lives and your health, it's affecting your children. Think of the ripple effect of that. So yes, while we're not as important as a surgeon or a medical professional, you need to work with someone who loves what they do, is serious about it. And you can't be serious if you're doing it part-time. I would take it a step further. You can't do it without no education. You need to have certain designations, in my opinion, to consider yourself a serious professional. As a mortgage broker, you have to do your mortgage broker designation, which isn't, I think it's a 30% pass rate.
That's a
I
tough
really
question.
wonder if mortgage specialists or advisors at a bank doing a mortgage would pass that course. Who would you rather work with?
Yeah.
Right? You need to make sure, and in my industry, most people don't have their CFP. They're not certified financial planners. They're not chartered life underwriters. They're not chartered investment managers. They don't have certain designations. So in my opinion, if you're working with a professional, they need to earn your business by showing, I'm serious about this, I do this full time, I care about this. And in my opinion, my favorite question to ask people is, if you won the lottery, what would you do? And I ask that of the professionals I work with. If their answer is my answer, which is nothing in my life would change, that's what I want to work with.
Moral of the story, vet your professionals.
Vet your professionals.
Well,
Yeah.
I
Gurtej,
think we are wrapping up.
yeah,
right?
we're wrapping
Yeah.
up. Gurtej, thank you so much for being on the show today.
No, thanks for having me.
Yeah, tell the viewers a little bit about your credentials or where they can reach you.
And
We'll
then I
have
have
in the
one
description
final question for
anyways.
Okay.
Right? Yeah.
Best place to follow me is my Instagram, and I think TikTok is the same handle. It's just Mr. Money Canada. And then my business is whitecoatfinancial.ca. And so I run White Coat Financial. It's a full service financial planning firm. We do mortgages, we do investments, we do insurance, we do financial planning as a whole,
Right.
For Canadian doctors and dentists. And so those are really the best places to follow me.
Sweet. No, thank you, Gurtej, once again.
That is
Yeah.
awesome. One question. I love your business name. Why White Coat Financial?
Couple of reasons. Number 1 is a lot of my clients, after heading into COVID, I was looking at my book of business, and most of them were medical professionals. Some of them were dentists, some were optometrists, some were physicians, some were nurses, some were chiropractors, but they all sort of fit into that medical professional space. And so I always wanted to work with just one type of client, because you can only do so much for everyone. I'd rather be a specialist in one type of area. But I was always scared to jump in 2 feet and narrow down and market myself as someone who only deals with these clients. Then COVID hit, and it allowed me to go Canada-wide. Because I was always worried, if I'm only in BC, how many of these clients can I really get? And so because of COVID, because I could go Canada-wide, that's when I decided to launch White Coat Financial.
That's
so
awesome.
I could narrow down and work with just the type of people that I work with. And because you guys know me, I'm competitive. I want to be the best. I can't be the best being the advisor for every single person out there. I can only be the best if I'm an advisor to very specific types of clients, which is what allows me to go so wide on the services we offer. We handle everything when it comes to your money, but we only work with a specific type of person, which is what White Coat Financial does.
Man, that is awesome.
That's
Thank
awesome.
you for that answer.
Yeah.
Super cool name. White Coat Financial, guys. Doctors, dentists, Canada-wide. You want your financial planning. You guys should do your surgeries and do your teeth work.
Yeah.
And let Mr. Varn handle your financial planning.
Yeah.
Thank you for joining us today.
No, I
it was
appreciate
such a
it.
pleasure. Wealth of knowledge. And we hope to have you again around another time.
Yeah, we'll have to do a
definitely.
round 2 because I
Yeah.
talk too much. We probably have a ton of other topics we got
Good
to talk
problem to
about.
have.
Yeah. No, I appreciate you guys having
Yeah.
me.
All right, guys. Oh, on that note, guys, just closing comments. Please remember, everything discussed during these episodes is not financial advice, just information to educate the consumer, drawn from our personal and business experiences. If you have any specific questions about your financial situation, please contact Brightcap Financial, City Center Mortgages, or today, White Coat Financial. Thank you very much, guys. Have a great weekend.
See you guys. Like,
Thank you.
subscribe, review, whatever it is across all platforms. We'll see you guys soon.
Yes.
Thanks.
Appreciate it, guys. That's funny. I forgot about that. Disclosure till the end. I was like, oh my,